Happy Monday, everybody. Paul Olbrantz with this week in interest rates. Let me adjust this a little bit. So we're a little bit in the dark. We're in the process of creating new office space and all that great stuff, changes and stuff. I love changes sometimes. But we're not here to talk about me and changes. We're here to talk about interest rates. So a couple things we're going to talk about today. We're going to talk about the future of interest rates. You know, there's a lot of misconceptions out there because we keep hearing that the feds are going to lower interest rates. So naturally people are thinking, well, interest rates should follow as well, but that's not necessarily true. We're going to talk about where Fannie and Freddie Mac predicts interest rates to be in 2026. At the very end, I'm not get to the end yet. We're also going to talk about Case-Shiller and house appreciation or home appreciation. We're going to talk about what to look for this week that's going to impact interest rates. And at the very end, if you're a technical nerd, I shouldn't call you a nerd, but I'm a nerd like me, and you want to look at the bond chart, I'm going to bring it up and share with you why rates have gone down, or gone up, and why we're trading right now. Because remember, bonds, 30-year fixed rates or bonds, they're traded on the open market, and they're in this very narrow gap right now, this little trading channel that either way, up or down, can create some good movement in interest rate, either a positive or a negative. So the more you know, the less you'll be surprised. So what do you say we get started? Let's go ahead and bring up the, no, that's not what I want to do, the interest rates here. So the interest rates today are still fantastic. They're about 5.5 for VA. FHA, you can get as low as 5.375, conventional 5.75, jumbo 5.875. Remember, a year ago they were very similar. However, the difference is they're staying. We had that short window a year ago where rates were like this. So this is positive news for home buyers. But it's also positive news for people that have already bought because they're refinancing, and eventually it's going to create some competition out there that's going to push prices upward. At a later date this week, I'm going to create a video that if you're thinking of selling your house, there is a strategy right now that is absolutely crushing it, knocking it out of the park. And there's another strategy that is leaving houses sitting dead in the water. So if you're thinking about selling your house, reach out. I'll send you the video, and it'll help you get top dollar for your house. So I also notice here that interest rates, there's nothing else to notice. Let's keep moving on. So last week, the Feds did meet. They did lower the interest rates. And I created a video because there was so much confusion about this, that how come if the Feds lowered their short-term rates 0.25%, how come 30-year fixed rates got an upward pressure? Well, remember what we've been talking about. It's not always what they do, it's also what they say. So the 30-year fix or the bond market already had it built into interest rates that they were going to lower the interest rate, the short-term rates, by 0.25%. So any deviation from that, good or bad, would have impacted interest rates, but they stuck to the 0.25%. What did change the market is Jerome Powell's comment about, are they going to reduce interest rates in December 10th? And he says, I guess the question was, is it a certain that you're going to drop rates another 0.25% in December? And he replied, that's not a foregone conclusion, far from it, meaning that it's not certain that they are going to reduce interest rates, short-term interest rates in December, which sent a little shockwave to the bond market that, hey, wait a second, maybe inflation is not under as control as we think it is. So therefore, we better lower that bond price, which put an upward pressure on interest rates. Very interesting on how all this works. Oh, my alarm's going off. Hey, what do you know? All right, so let's talk a little bit about Case-Shiller Home Price Index. Now remember, this is a measurement of appreciation throughout homes throughout the nation. Month over month, they were down 0.2%. Here, let me make this a little bigger for us. So in May, month over month, it was down 2%. In June, 2%. July, 0.1%. In August, it's up 0.2%. Now, the reality is, because if we go back to when interest rates started to go down, we're starting to see that the contracts signed with a lower interest rate starting to fund, and that's why we're starting to see some appreciation or some increase in purchase pricing as it relates to August, May, June, and July. So a lot of those contracts were signed when interest rates were higher. So year over year, in May, it was up 2.4%, June and July, and in August, still up 1.5%, but you can still see that it's starting to soften a little bit, or appreciation is starting to slow, which is really good news for buyers out there because they don't have to pay for as much of a house, and especially with interest rates where they're out. This is really a good time to get out there, find a house, get your offer accepted, get your closing costs paid for, because here's the thing. If you take a look at month over month, sooner or later, year over year is going to follow, especially if interest rates continue to decline or stay stagnant. Speaking of rates, I think I missed the slide here. So we're going to talk about the future of interest rates right now. Fannie Mae and Freddie Mac, as it relates to 2026, if you look at the most recent article, so if you go back, I think it was in May, they were thinking, low fives. June, it was about mid to high fives. Now they're thinking 5.96% is where rates are going to land in 2026, which I have to tell you, we are already there. So if you're waiting for interest rates to go down before you get out there and buy a home, you may be waiting for something that's not going to happen. Now, remember, these are all probabilities. So at any given moment, something can happen that can change the trajectory of the market. But remember, that could be good or bad as well. So this week, what to look out for, it's a short list. Wednesday is unemployment date. Remember, there's two things that the Feds and the bond market are looking out for. It's inflation and employment. This is going to be a big number on Wednesday. And for all of you that we're not working together, why are we not working together? Here's a QR code in my calendar. We do what's called a hopes and dreams conversation where there's no applications, no credit pulls, nothing, no commitments. Utilize my 20 years of experience. I'd be happy to share with you everything I know in order to make your family save money and have a great home buying journey. Okay, for all those of you who stuck around and wanted to take a look at the bond chart, let's bring it up. Let's make me small. And let me see if I can, give me 1 second here. This is, I don't know if it's a first time. Can you see? Yep, you can't see my, okay, cool. So right here is where we're trading. So this is when the Feds came out and they made that comment about being not a foregone conclusion that they're going to reduce the interest rates again in December. The bond market didn't like it. You can see the bond prices drop, which puts an upward pressure on interest rates. Typically, we were doing good for the first day, but the second day on Friday, we dropped below this Fibonacci level, which put us in this small, narrow channel here. And actually, it looked like we opened below it, but we found our way to some common ground to stay in between. If we get news that will drop us out of this Fibonacci level or this 50-day moving average, there is definitely some room to go down, meaning there is some room for interest rates to go up. Conversely, if we break above this, we get, I hate saying less than expected unemployment numbers, worse than we were expecting. That could push us up, above this moving average and get us into this channel here and get us into some positive territory. So unfortunately, what has to happen, I don't know where I'm at. In order for what has to happen for us to get lower interest rates, the employment numbers have to come in worse than expected. So there you have it. If you have any questions, give me a call. Have a wonderful Monday. Do something magical. If you need anything, give me a call. Would love to connect. Take care. Olbrantz.